Welcome back. Well, it seems lately the stock market has become very correlated to the Fed funds futures. We see here the S&P 500 in purple. This goes back to our last Federal Reserve meeting around September 15th through present day. The green line represents the 570, the 550 to 575 range, implying if the Federal Reserve were to raise interest rates, current interest rates are at 525 to 550. So the green line represents the Fed funds futures, the chances the Federal Reserve will raise interest rates. And we can see going back just a couple weeks, as the stock market has moved lower, so has this green line. In other words, the odds of the Federal Reserve raising interest rates as that declined, so did the stock market. However, today, in part as a result of strong jobs numbers, the chances that the Federal Reserve will raise interest rates increased. Well, those of you watching the stock market today, we started lower and then we rallied higher. Taking a step back, the black line shows us the chances the Federal Reserve will raise interest rates. Now, the x-axis below shows us the different meetings. The next Federal Reserve meeting is November 1st, December 13th, so on and so forth. The black line shows us, and this is as of, by the way, September 29th. This is what the odds look like at the point at that time. We see here that there was a 33% chance the Federal Reserve would raise interest rates on the December 13th meeting. The red line represents the chances of no change. That declined. The green line did not move. The green line is the chances that the Federal Reserve will cut interest rates. So take that off the table. So as of September 29th, the Federal Reserve had a 33% chance of raising interest rates. Fast forward to present day, October 6th. The black line shows us a 43% chance. We went from 33 to a 43% chance the Federal Reserve would raise interest rates in the December meeting. We mentioned the December meeting because you see this is the highest probability. This is the peak of this black line. The red line shows us the chances that they will not change interest rates. That declined to around 55%. Here's a different look at it. We can see here the x-axis below shows us the past couple weeks and the significant economic numbers that were released. This is as of September 29th. This was the day last week the PCE, Personal Consumption Expenditure, and inflation report was released. There was a 90% chance the Federal Reserve would not raise interest rates. They would keep them at the current 525 to 550 range. There was only a 10% chance the Federal Reserve would raise interest rates. That was as of September 29th. Fast forward to present day, October 6th. The 90% is now a 68% chance. The chances the Federal Reserve would not raise rates and keep them at 525 to 550, it wasn't 90%, now 68%. The chances of raising interest rates was at 10%, and it's now about 32%. And this is as of today. Non-farm payroll was released this morning. The jobs number was good, and basically the market is perceiving from this that the economy is strong, inflation is on the rise, the economy can handle higher interest rates, and there's because also of strong jobs numbers, it's perceived that inflation will continue. Well, take a look at the purple line. That's the S&P 500. This line represents the last meeting. So take a look at the trading activity that took place from this line moving forward. You can see the purple line, S&P 500, as it declined, so did the green line. The green line represents the 550, 575, meaning the chances the Federal Reserve will raise interest rates. The probability is they will raise interest rates based on this green line. The red line represents the chances the Federal Reserve will keep rates unchanged at 525 to 550. As the purple line, the S&P 500 went down, the chances of interest rate hike also went down. The chances interest rates would stay unchanged went up. However, as a result of today's meeting, the chances of a hike increased, the chances of unchanged decreased. Well, let's make this a little bit cleaner. Here we see the purple line is the S&P 500. This is the last Federal Reserve meeting, and the green line represents the chances of an interest rate hike. Now, the purple line does not take into consideration today's trading action. However, we know we did close on a strong level. So, if we see moving forward strong economic data, which leads us and the market to believe the Federal Reserve is more likely to raise interest rates, number one, because there's still a threat of inflation, and number two, because the economy can withstand higher interest rates, then we should see the green line move up, the chances of a 550, 575 interest rate hike in the next meeting. Again, it's only 32% right now. So the probability is they're still not going to raise rates, but the perception is they're more likely to raise rates than they were yesterday. There's been an improvement in that possibility. And if history is any judge, as the chances of an interest rate hike increase, so will the S&P 500. Conversely, if we see a number that comes out that shows us weak economic growth. We have inflation numbers next week. If we start to see poor inflation and the chances, or decreasing inflation, and the chances that the Federal Reserve may not raise interest rates, then we may see this green line go down and we may see the stock market go down as well. Keep in mind also, oil has declined since the last inflation number. Oil was a very big part, energy was a very big part of the rise in inflation last report. If fuel and energy prices continue to decline, maybe the inflation numbers also will, maybe stocks will as well. We hope this has been helpful. We look forward to seeing you back soon.